and I made a new API for Trader, and it
Hello,
just won't
hello,
work.
hello. Oh yeah, dude. API stuff with Binance is so weird. All right, let's just make sure audio's good. Make sure you guys can see us. Hello, hello. Can you guys say hi? Say what's up in the chat so we know we're ready to rock and roll. Zero watching. That's not the right one. I don't
You
think.
got no, there's 20 on there now, and you are
No,
live,
there's 20 on there now, and
and chat works.
Okay, what's
What?
poppin', people? All right, cool.
What's popping?
All right, what's up, Kevin? If you're new to Signal Profits, say hello. We got to make sure we're got to welcome all you new guys. If you got questions specifically how anything works, make sure you ask them now. All right, so the daily. So on the daily, we actually did bounce on that RSI support that I was talking about yesterday. So we'll just do a quick little recap. So we were watching that 41, 42 RSI support. Hello from Seattle. What's up, Sherpa? And we did get that bounce at the 40, 41, 42 level. It was a pretty good bounce today. Almost, let's see, from the very bottom of the candle, 94.75. 10% move on the day, which is awesome. I fell asleep as I was waiting for this. What time did that happen? That was, when was that candle bounce? Yeah,
Really?
three freaking o'clock in the morning. I fell asleep around like 1-ish, and it was just kind of still downtrending. So I missed the freaking buyback. Unfortunately, I was waiting up all night for it, but whatever. I shorted Bcash though. I hope you guys caught the Bcash short. We'll just take a look at that one real quick. We shorted it right up here. 3,100 was our entry. We had a stop up there. And then just absolute savagery. 11% drop. I think I took profits on 80% on a 10x short. So beautiful. And then I had a crazy 15% recovery. I did not play the long bounce. I just played the short. Radwan Labab. Hello, man. What's going on? Looks like you're part of the Illuminati with your icon there. Okay, so XBT USD. What's going on? Where's the buy-in? Where can we get in on this thing? So we're still. I mean, we basically hit the bottom support zone. Let me just get rid of everything. We'll just go naked here. So we basically hit just a bottom support zone if you go on the 4-hour candle closings. And we had talked about that yesterday. We've got this kind of trend line that goes up. So we hit this here. Usually what you see is you'll see a kind of a reaction and then a pullback. We haven't really had that pullback yet, but all of these usually have a pullback from previous. This one didn't. This one had like little to no pullback, but it did have a pullback there. And I believe that's one of the ones. Let's see, that's one with the 13. So I think we bought in at like 9,800, kind of high risk, 25%. Then we added 25%, and then we kind of laddered out up here. So we definitely could have added in some positions, like laddered in around the 9,800 level. That 9,800 level was that 100 MA on the daily that we had talked about yesterday right here. Remember when I said if it breaks the 50, it usually tests the 100, and the 100 usually sends it back to the 50 or the 20, whichever is the highest EMA or MA. So basically, we're in the process of getting that bounce. So topside target would be 10,800. That's where we can look for shorts, but we do have this topside resistance here. Kind of looks like that. So if we break this 10,800 zone, then the next target would be 11.7. And so like total move from here would be around 12%. But the better plays were really just shorting the alts on BitMEX instead of trying to like knife catch Bitcoin. The alts were just super easy. We caught over a 12% drop on EOS on 10x. That was 120%. We caught an 11% drop on Bitcoin Cash. So it's not always the best play to try and time Bitcoin, especially when the volume wasn't really in our favor. It was kind of a low volume dump that kind of moved into a high acceleration dump. I'm still in on that one, 2x short BCH. Yeah, if it drops 11%, I usually like to take profits. I did notify everyone that I did take profits last night, but yeah, hopefully that drops again. I didn't actually look to see where I was at. Do I think we'll still get a pullback so we can get in on that Bitcoin train, or maybe just wait for the next setup? Yeah, so we were watching for the pullback. It was a bit of a high risk. I put up my chart. We were in this symmetrical triangle and struggling at resistance, struggling at the break of the downtrend. So we could have definitely entered in here kind of on a high risk play, let people kind of decide whether or not they wanted to take the risk. Because after a dump, you usually get a 23.6 pullback, but we were massively oversold on the 4-hour. So on the hourly, we broke the 50. So we might be able to get like a little pullback, which would actually kind of line up here. So if you're trying to get in on this, a very shallow pullback, if you want to ladder in, like 10,280 is not a bad pullback zone. It's selling off now, 20 minutes before the daily close. And again, we did have a little SR flip here. And I think this lines up with the 382. Let's do like a full Fibonacci. Super close, actually more close to the 50. Let's see what it does up here. Let's look at the full structure. See if there's anything a little bit more accurate. 382 looks a little bit more realistic here. Okay, so the 382 is around 10,400. We got 3 rejections there, which was also a previous little temporary support. This was a resistance on the way down, so it's expected that this may be a decent support. On the hourly, we do have the 50 MA. On the 4-hour, let's take a look if we've got anything. Not much. The 200 MA is still up here. It's not a good looking wick on the 4-hour. This could have been just a little tiny dead cat bounce. Oh, look at that, actually. 12-hour, we hit the 200 EMA to the money. That's pretty interesting. Let's see if that had, yeah, it looks pretty reactive. So that 200 EMA, we'll have to keep that in mind for the 12-hour. So overall, just kind of waiting for that pullback. We could take a high risk long. We're getting close to it now. On the hourly, just kind of into that zone. You'd have to be pretty quick though. But we could also just drop down a little bit more down into here. But that 50 MA should hold us for at least a little temporary bounce back up. And it depends on what you're looking at. If you're looking kind of long term, big spot, I still think we might head a little bit lower, especially with this type of rising wedge structure. If we can't hold this zone, then most likely we'll get that pullback we're looking for to 98.50. And that's really the ultimate pullback level for me, is basically 98.41. If you go from the swing low to the swing high, that's 618, 98.41. You can ladder in buys all through here. And I think that would be very bullish if we can get down here and then react and then form a higher high. That'd be a very, very beautiful long entry as far as spot's concerned. And what are your thoughts on ETHUSD for now? I'll take a look at ETHUSD and then I'll flip it over to Chingus and get his thoughts on Bitcoin. So ETHUSD is, it's not looking too hot.
I mean, be honest.
Let's be honest. All right, let's see. Okay, so we do have a little bit of a descending broad wedge. So if we can bounce, we'll be looking at a 10% play to 204. But still, we broke a lot of key supports here. We had this downtrend. Basically, looks like we were basically in a bear flag, and a measured move from this bear flag would send us a bit lower, 36%. I mean, that could send us back to, I don't know, 150. So how does your recommendation line up with the actual Bitcoin signal? Yeah, so let me take a look at the Bitcoin signal. That was from Werner today. We did kind of confer. We thought we'd get a quick buyback zone. So 10,100, yeah, that's a perfect zone. And again, if you this is a short-term 7-day swing trade. If we do get that 98.50 trade, we can probably go a little bit more than our 2% risk for this trade. What we were looking at earlier was, hold on, let me bring my XBT chart up. . I go to the 30-minute. Okay. What we were looking at earlier was this breakout here, and we were looking at this SR flip here, so 10,100 to 10,200 for a shallow pullback to basically the 382 zone, and then continuation higher. And yeah, still a good trade, especially 7-day should be totally fine. My point is if we get a breakdown, this 618 would be a good area to increase. Instead of 2%, I'd go a little bit higher as far as capital risk. So it does look like we're getting a nice sell-off now, which is good. I didn't take a short on this resistance zone up here. I was waiting for a little bit of a better setup, but trend is still bearish, so we just kind of have to be a little bit more cautious. All right, let me take a look here. All right, so I'm going to flip it over to Chingus. I'm going to get his thoughts on Bitcoin, and then we'll take a look.
Bitcoin. All right, so just going off that same chart, we keep referring back to this is just the daily chart, daily look, swing fails to the top side. That's this level zone up here. Secondary one on candles on the initial, right, swing fail over here. So we could see our area coming down. When we did puncture down, we did close, we found support on this trend, which is what we wanted. We got a little bit of buyback early yesterday, so roughly 24 hours ago from here, and then we and we went down for several hours on good volume. So there was a lot of interest pushing it down. It found key areas where it just kind of hovered for a little while, so you can watch all of those on the way down. So you can see these little pockets where you kind of dumped. You had an area of, light consolidation, right? So let's say that's in that 10-8 zone that we talked about earlier. Another dump again. Then you had a little bit of reprieve over here between 10.4, which was another key level, 10.4 up to 10.6, that little ballpark. Again, another dump. And you had another big push up, and that was 10.1 to 10.2. So those are all areas that, you mentally put in the back of your head, because this is a laddered move down from our base, right? So this is base right now. The picture of this looks, very similar to 6K 31, where we just we had a big dump, sideways, big dump, sideways, big dump, sideways, and then big dump, and then you had full restitution. The idea here is that the buyback was at least strong, and that's what we want to see. So if we look at something like the daily, that's the kind of buyback you want to see. You'd like to see a wick like that, similar to a wick like this, a nice big buyback, which again, this did not reverse trend. This did not put us back in a local uptrend. We're still very much in a downtrend, but that's why Jacob's saying this is a solid, 7-day play. Like this is what we would be expecting off of this type of bounce. Now, I would say from this zone, max, right? Really max before you get into any serious trouble. Where the hell's my thing over here? If you took it from where we were currently right now, and I'd be butting my head on this guy right here. So just like Jacob said, 13%. I mean, we're looking at the same thing. Coming back to that level would be great. Finding resistance on that level would be kind of, that's what I would be expecting. I don't think that we have the mustard in it right now in order to push up, unless we were going to do that in a day. We do this kind of break, candles like this, a massive move, huge interest, big push, momentum carries it up over, pull back, find it as support. That's an entirely different ball game. Right now, we're dealing off of a double bottom, and essentially with the double bottom, you would expect to move to the upside, really without doing too much effort or work on anybody's half, finding resistance right where you thought you would, and coming back down. The buyback is awesome. It is a higher low. So in a very local sense of the word, we are, establishing a very local trend. However, getting back to this zone is going to prove to be difficult, I believe, to break it. Further downside, same levels that we talked about yesterday. Nothing really changed. This zone right here, I really like. We didn't reach it. Not yesterday. This is the 91 to 9 zone, so 9K to 91. This is all structure levels. So again, if you look at this chart just as a whole, like building blocks, you come up, you smash your head on something, you pull back. You come up, you smash your head on something, you pull back. This tested these levels over here. This is still somewhat untested. Came down twice for a double bottom for a quick flash, which sometimes is good enough in a strong enough trend. But we're so close at this point now to come down and not test these levels. I don't know. It doesn't really sit well with me. It also sits perfectly on the 618. 618 pullback would be great. Right, this zone right here on pullback, at least for fibs, is just out in the middle of nowhere. It's between the 382 and the 5. It's just a very it's a non-fib level, let's put it that way. You have structure, and that's it. That was the hesitation on one of the the last parabolic move up. The only area you hesitated is the area that we came down and flashed to, but nothing on a 382 or a 618 would be down here. 786 all the way down here. Those are all structure, right? And those were all reaction areas. And that's what I would be looking for. So more like a reprieve, where you kind of come down, you make a move, everybody's happy for a little while, and then, you take their toys away and you leave the sandbox screaming. We did have interesting moves over here on Bitcoin dominance. So we did have the 1, 2, 3, 4 days in a row. We were pushing down off of that high level, right? That's that level that goes back. Oh, find it. There you go. So all the way back in this ballpark over here, right? April 2017. So we finally smashed our head on that. We've been going 4 days down and expecting to go all the way down to find support on this level that you can see support resistance. We flipped or used as resistance 1, 2, 3, 6, so like about 6 times. We're looking for that major flip, but that does give way for the alts to breathe a little bit. However, today it started stealing the show again. And yesterday it ended up stealing the show. So we're getting this little, dominance is coming back. And this is what we need the alts to do. We need the alts to have that cushion so that they can take another beating if need be. Now the alts, like I was getting 10% moves on every Coinbase all day yesterday and all day today. 10% down all day yesterday, literally every coin, 10% up today, all day, every coin. So from what everybody lost yesterday, they all sort of even out today, which is strange given the dominance factor. Not only given the dominance factor, but given the buyback on Bitcoin, you'd think that there'd be no volume in anybody, right? Everybody would just dump to Bitcoin and say, look, I'll take that move up. Why the hell not? This would be a great area to, push higher and get out of this trend.
I have a little bit of a different structure on my dominance. I actually have that we tagged support.
Oh.
Yeah. I'm just using a simple lower trend line here. I don't know if you saw. Because we basically came down and we SR flipped. And now we're heading up, and it looks like we're even flagging for another push, maybe to like set back up to 71, 72.
Huh. That is it's a good line. I like the line. Let's see.
Definite rising wedge structure though. So I mean, the ideal is what I was saying yesterday is when we tag here, that's when you can long majors. Not necessarily short Bitcoin, because this doesn't necessarily mean that short Bitcoin is going to go down in value. In this case, it did. But in this case, you can basically blindly long majors there. And when we tag support here, that's when you want to short majors. So we shorted EOS, we shorted Bitcoin Cash, and made over 100% when we got that nice support bounce. You could have done the same thing here. That's when Ethereum, Ripple, and Bitcoin Cash and ADA and everything basically got absolutely demolished in value. But we didn't know this one was support yet because we didn't have this line. We tagged it once, tagged it twice, but now we've got the line. And same thing here. If you go back and you kind of look at the history, you'll see that when Bitcoin broke here, we definitely had like a small little reprieve back in July on alts and specifically majors, a 2% drop in dominance. But then we found support and we started climbing again. So just just gives you a nice little tool to know when to move into majors and when to move out of majors. The other thing that's really worth noting is when dominance is going up like this is when you want to play USD pairs. When dominance goes down like this is when you want to play BTC pairs. Because if you can find charts that look more bullish than altcoins, so let's say Bitcoin goes up by 9% and dominance goes up, but if you can find an alt that can outperform Bitcoin, then you're going to make both BTC and USD on this sort of a move. But if you see Bitcoin pulling back, that's when you want to play BTC pairs, because it's basically like a synthetic short, because you're longing alts, which is shorting Bitcoin, and the goal is that you're finding alts that will drastically outperform Bitcoin, so that let's say you get the Bitcoin drop of 5%, but your alt that you were in did 25%, so you're up in both BTC and USD. So that's the goal, and that's kind of like the framework or thesis that we try and frame our signals around, just so you have kind of a construct or context, because at any one time I can come up and generate 8 to 12 signals, but unless they fit that thesis, then we don't typically send them out. But I do send them out in the Discord channel for people that want more action. So just make sure you're following along the reversals, continuations, and if you're not comfortable with managing Euro trades, that's like a whole different story. But yeah.
So Kevin's asking about MAs and EMAs, the difference, the accuracy. MAs they give weight to every piece fairly. So if it's a 200 MA moving average, no matter what chart you're on, it's 200 periods of that chart. 4-hour chart, 200 4-hour periods, and each one of those data points is given weight respectively, right? So everybody is worth 1 or a value of 0.5. And all that data is accumulated, and then the averages are made, and then it's plotted on the chart. The EMA is exponential moving average. And the way that algorithm works is it puts more weight on the recent price action. So again, a 200 EMA is still going to be 200 periods of that current chart, but it's going to put more emphasis on the more recent price action. So in other words, it's going to say 200 4-hour periods ago, I care about it, but not as much as I care about what happened, yesterday and the day before. Does that make sense?
Yeah, just to add to that, every asset responds differently, and those moving averages are usually algorithms that are programmed. And so you really want to, I've said this about 1 billion times. People ask me how to get good at trading, and my advice is always trade one coin nonstop for like 3 months straight. Don't even look at anything else. Just make that one coin your bitch. Like literally, like my Ripple and Ethereum were like, for me, just like I knew them in and out like the back of my hand, what they responded to, what moving averages, what Fibonacci levels. And so, just trading one coin is way easier than trying to scan the market of 1,400 coins and coming up with it's just way more time consuming. So if you really learn one coin and you're able to trade it bidirectionally, you're able to short it and long in it, so what Fibonacci level it gets rejected on, what Fibonacci level it finds support on, what moving averages it likes to support, even on low time frame preferences. Is a 4-hour more accurate than an hourly or a 30-minute or a 15-minute or a 5-minute? And once you get dialed into a coin's movements, you can just basically print money because it's just nonstop. You can really understand what the coin movement is going to be. So
yeah, and I echo that 100%. And if you're going to do that, definitely stick with a major, and definitely stick with something that you can long and short. There's money to be made both ways. So, take advantage of that. Plus, you have more traders trading those pairs, something like Ethereum, something like Litecoin, something like XRP, Bcash. there's a lot of traders in there. There's a lot of volume. So you get the overall global average of traders as opposed to trading something like, I don't know, just like whatever, theta. There's just not that many traders trading it. So you're going to have a different pool, different sets of bots, a different amount of a ratio between bot trading and human trading. So you're going to see something different. And plus, you don't really have the opportunity to make money on the short side. So you'd like to be able to fully understand something, especially if you can make money both ways. Yeah.
All right. And then, okay, so let's take a look at, there's a few trades that I'm eyeing right now. If you guys want to get in on a little action.
Oh.
Let me see here. Okay, so here's our watch list. We had obviously Raven. We'll go through our kind of active trade, which was Raven. So if you watched the stream yesterday, you'll have remembered I said I'm expecting a pullback right to that 618, which was 330, and we tagged it to the money. And now we've bounced, and so this looks like a pretty good trade for now. And I'm definitely targeting higher targets. The thing that we want to watch for is a break out of this current structure / pattern. We got to break out of this falling wedge. That's where we essentially, got in. We got rejected up here. And if you remember, the hourly yesterday was basically that 200 EMA. But now we're forming this consolidation pattern. So once we break out here, that's when we should see this run. And so Raven targets are still pretty good. I mean, I'm targeting at least 10%, 370, and then upwards of 400, 420. So I'm hoping for at least 20% out of this trade. It looks good. Looks like we've got a nice floor. We've pulled back really well. We've put in this W structure, consolidating. Now, if it breaks down from this triangle, that's where we can look to close our trade. So if you guys watched yesterday, if you had closed it when I was saying to close it up here, you could have bought back in at the 330, and now it's bounced and we're up 3% from that new buy zone. So all in all, that one is looking pretty good. The other trade that was actually looking really good, that looked like we had a bit of a W structure as well, was ZRX. And I was looking at the, let's see. So I was hoping for one more swing down here, which was the 618 zone of the first impulse. But from up here, yeah, so same spot, like 1630, 1625. I think that's a very good zone, but I love these types of W structures. That's the hourly, but on the 4 hour and especially the daily, you can see how it's just got that W structure. Usually those do really well, and it's just so massively oversold that we're getting really, really close to a bounce. Now, if it breaks down, this 1214 zone is going to be an automatic buy for me. I really like buying these, basically like wicks on the downtrend, but not a full reversal yet, just because it hasn't broken out, but definitely one to put on your watch list. And then the other one was ICX, which I did post in the reversal trade section. We got this basically falling wedge structure. It broke out here, but fell all the way down to retest the top side previous resistance. It's forming now. I was expecting basically like a move to come back up to this previous support that was back here where a lot of people got long on ICX. But just a move right here would be about 30%, and that looks pretty good. And then the last one was REN BTC. We covered this yesterday, and it did tag our buy zone. If anybody managed to get in there, it did come to the top of this zone. It did wick through it. Again, this happened at, let's see what time that happened at.
Like midnight or 1. It was early.
Yeah, it was like 6, 7, 8 in the morning.
Oh, was it that early? I thought it was before that.
But it did break out, came down, tagged this little zone. I did post this in continuation trades. Gave us a little buy zone there, broke out. And this is actually looking pretty decent for a continued upside move. I do like it. It's getting plenty of volume. It's got a flag structure. So this is actually pretty decent. I may look at just signaling this for at least an 8% play to the top side resistance. But I think this one's got a little bit more life in it. It's one of the only still trending coins. That's in an uptrend with moving averages still pulling up to the from the underside. So very solid structure on Ren, and then Link was the other one. We got stopped out on this downside wick after we did 23%, but we are forming an ascending triangle, and we did break out of this top side channel, and we are holding that as support for now. So we may just have to market buy within this triangle, especially with the Web3 Summit coming up. Got some big news, and then our targets would be something like, let's see, let me add the 1618 on here. Oops.
You're moving too fast for your own fingers.
Well, there was like a hidden trend line or something, and I was like, what the heck?
Like,
So
hey.
so targets would be, let's see if we can get in on this. Let me get rid of some of these fibs here. There we go. Okay. So if we could get on this 618 zone, so 23 right there, that's pretty solid. We set a stop about 3%. So first target would be 5% at the top of the trend. Second target would be the 1618, and then the third target would be the 2618.29407. So expect a potential another Link signal coming soon. So Ren and Link obviously still got high volumes. And then what was the other one we were looking at yesterday? Was that FTM or was that Anchor?
Cos and Dusk. And
Cost Dusk, yep. So Anchor, I was looking at the 47 buyback zone. We talked about this yesterday. It's got a very nice descending broad wedge structure. This is a little bit more high risk because we're buying within the structure. But if we can break out of here, this thing's got room to run, and it looks like it might pull a Dusk. And I would be targeting 1618, so about 100% move, similar to Dusk. And I'm going to let the man, the myth, the legend,
I don't know about any of that.
Chinggis, he's going to take over a few more alts, and he'll cover the Bitcoin close, which is already closed, and kind of how to play. We're at 10,258, so we're coming up to our buy zone.
Sure are. 10,250. So we just closed it down about 7 minutes ago. No, we're closing it down. I'm sorry. Yeah, about 7 minutes ago. Selling right away. Nothing crazy, about $50 off the top. So that'll be good for people getting their entries in. For just a 15-minute chart, you could sort of clarify some areas are over here. So obviously you have a level right here. This was resistance, came back up, resistance again, broke right through, smash. So you want to be able to play that on the downside. So the low side target, if you're not super worried about laddering in, would be about 10,154. Coming all the way back to structure, you're all the way back to 98.90. It's going to take a lot of volume and a lot of things breaking down in order for that to happen. Huge volume node, though, on the previous 24-hour period is showing about 1061. That's this red line right here in the volume profile. So you're looking at like the biggest amount of trading, the biggest amount of volume, the biggest amount of happy people all happen about that 10,057 zone. It's not unusual to come back and test point of control the next day if trading starts out headed in that direction, and that's what's happening here. Trading has started to the downside. Point of control is to the downside. If we were to hit that, that'd be a great entry if you're looking long side, right? So, like we said earlier, the overall. Right now for Bitcoin is trying to get back to that swing fail resistance level, which is this level up here. Of course, that'll change throughout the days, but if it's to happen today, you'd be looking at like 11,560 basically on the day. But before that, you'll run into the 236 at 11,368, and that's a little bit more relevant to get back to the fib level than it would be to get to the swing fail, just as of now, just to see what kind of resistance might be at play. But it would be a decent candle, right? That would all have to happen today. Obviously, as the trend goes down, targets go down. So if that were to happen today, you're looking at 12% move on Bitcoin. That's pretty big. If it were to happen tomorrow, which would be more in line with hitting our fib level. So let's say that candle would break apart like right about here. So very close, that'd be about 11%, and then the next day would be about 10%. So we don't really base anything off time theory, but we can see the last reaction period. You had two very small trading days, one very good trading day, but again, there's only 5%. We're asking it to do twice that. And then you had 1, 2, 3, 4 very slightly boring spinning top indecision type days. But you can see this swing fail, how the reaction came, right? One day you came up, you smashed your head on it, you pulled back. The next day you came up, you broke it, closed above it. Third day you came up and you came back down and retested it. This is textbook stuff. So if you memorize this move, these 3 candles, right, we look for that all the time. This is a support resistance flip. This is a trend line coming to the downside. It's not exactly a trend line technically. It's a swing fail line. It hasn't really been confirmed, so that would not make it a trend line. But what you do is you come up, you test it, you pull back. All right. You come up, you break it, close above it. And then the next day you come up and you come back and you retest it. All right. This 3 candle zone right here on a daily chart is fantastic. That is what gives you confidence to move forward and along. This would be a buy target, high risk, but it would be within trend. So it does take some of the risk away, and you're longing it really just to this level right here. At that point, you already have this line drawn because of this candle and this candle. So you already know where to look for resistance. And that's something that you would have to watch closely as you come across that 236. But stay in the trade, just, monitor it, be close, and then you be exiting, front running the levels over here, right? So on the downside, you look for the same thing. So we didn't get that, right? We pushed down, right? We found support. If this candle were to close below that trend and price was sitting somewhere around 92, I would be long to resistance and then short from there, So whether I was long here or just had a sell order here, it's the same idea, just in reverse. You want to be able to get up, test it, come back, pull back, confirm, and then get the hell out of there. So that's what we're looking at. So right now, of course, we're looking long to resistance, right? That's basically it. Short-term play. If you find heavy resistance at the 20, the play's over. That's it. This 20 is a big deal. The 9 EMA, 7 EMA, that's the red and white right here. Those are a big deal. The 50 MA is a big deal, and they all converge right here. Right? They're all sitting at 10,808, more or less, 10,800. So the play is you hop in now, you monitor the reaction at 10.8. If you slice through it, then essentially you're looking for 11.5. If you have too much trouble, it might be coming back down, and that might be enough speed to smash through this and then break and close below it. All right. Excellent. All right. So yeah, like Jacob said, if you guys have any questions, ask them. I'm trying to sort of think what went through. There were some questions in the Discord earlier talking about probabilities. Jacob put a trade up there, and it was a reversal trade, and he mentioned, he gave it about a 20% strike, and the question was, well, what made you give it a 20% strike? And his answer was very simple. Reversals tend to be a 1 to 5, so therefore 20%. And that's where you derive these strike rates from when it comes to historical trades. So it's something to keep in mind. I like to add weight to a trade. So I like to say, with this, and this, it becomes more probable. I don't put percentages on trades, on strike rates, unless it's a pattern. Patterns have built-in strike rates already. Somebody already did all the work, and there's tons of data out there, and an ascending triangle with a prevailing uptrend, and volume declining since the mouth of the pattern, and a breakout 50 to 75% of pattern before apex nets you a 70% strike rate from a measured move, right? So it's like that work's done for you. You know what I mean? You just have to make sure it's an actual quality pattern. You have to make sure it actually meets the criteria that data was pulled from. And that data is, if you're going to have an ascending triangle, right? So you're going to have basically a horizontal line. You know what I mean? This is going to be like a double top, triple top zone, something like that. And price is going to be making higher highs, right? Or higher lows. I'm sorry. Same highs, higher lows. And then this will essentially come in from a prevailing uptrend, right? So uptrend, bang, you get in, and then, you make your higher low. Everything's normal until this. Now you have a double top. So now price comes down and makes another higher low. Okay, now you're starting to form a pattern. Now price comes back up again and makes another. Now you have a triple top. Now what data tells us is that you should come back down one more time minimum, and then you break out. Because this is a well-known pattern, you could put a strike rate on this. You could say, in a prevailing uptrend, 3 touches to the upside, 3 touches to the downside, breakout play. This is your measured move right here. You're measuring this distance. That's the mouth. About 70% of the time when it breaks out to the upside, right, it'll hit your first profit target, which would be this measured move. So that's what we're talking about with a lot of these when it comes to strike rates. And when it comes to, a play like Jacob was talking about, if you study Litecoin or Ethereum or Ripple, and that's what you trade, and that consistently breaks the rules when it comes to patterns, then it would have its own rule set, right? And better than anybody, say, you know what, this thing does not respect harmonics. It does not respect ascending triangles. It's got about a 10% strike rate on ascending triangles as opposed to symmetrical triangles. Well, that's something you would know based off of that pair. It's impossible for any analyst to know every alt chart. There's no way. 3,500 plus coins, like exponential amounts of pairs, because you can have that coin with Bitcoin pair, Ethereum pair, BNB pair, USDT pair, USDC pair. You can't do it. You can't do it. No one person, no one human can study that type of behavior. So, that hopefully that answers some of those questions. I also add Confluence into mine, and I know Jacob does the same thing, and I think every analyst does on a subconscious level. So for instance, you're in this trade right here, and you say, okay, well, I want to buy back in this area on that zone based off of this pullback. Why? Right? Well, I'm in a prevailing uptrend. I have a good reversal from local top highs. Okay, boom, that's one. Do I have higher lows like in sequence? Does it look healthy? Yes, check. That's 2. Is volume on the rise during the uptrend? Yes, boom, check 3. When I have my high and I have a pullback loan, does it have historical value to it? I want to pull back here. That's the 382. Boom, check 4. I want to come back historical level right here. Boom, check 5. Right? That's 5 things that I might not be writing down, but that's mental confidence, you could say, or confluence that this is a trade that I like to take. right? So if I come back up here and I say, all right, well, let me put my, well, let's do this, right? So let's say I wanted to get some other indications over here on whether, I really liked it. So I come over here and I say, all right, well, I got a TTM squeeze right here. So TTM squeeze on the 4 hour is showing momentum slowing down to the downside. That's good. Why? Because I want it to be able to come down to these levels, right? So I'm okay with that. That's fine. Now I look at RSI. I got a fast and I got a slow. I got curling down and a crossing pattern with the MACD just about flattened. Again, this is okay. I still want to see this come down, and then I want to be able to see this start ticking back up. This is the center line, 50 mark, right? So I'm dancing all around the 50 mark on the fast one. That's the 7-day. And I'm just above the 50 mark on the 14-day, which makes sense. So that's good. If they were to cross down, we'd be looking at maybe a breakdown in the play and maybe further downside as opposed to the 382 pullback, maybe a 5 or a 618. So things would change, right? But again, that's like, you'll just do that subconsciously as you take these trades. So you'll say to yourself, all right, well, everything looks good on the 1 hour, but the 1 hour is a little bit too dialed in, right? So let me head to the 4 hour. All right, 4 hour looks pretty good. Let me look at the 12 hour. 12 hour is great. We got strong buying, 1, 2, 3 periods in a row, good buying. So this is 2 days worth of buying, not even a full day on the buyback. We did get first entry on trend. That's this yellow line right here. This would have been first target zone. So if you do laddered in buys, like you would buy in here prior to it hitting your level. If you get, one of those quick wicks down and then adios, right? And the whole trade walks away. So you suffer a little bit on average if it does come fully down to your buy box, and you absolutely suffer if the trade is no good. And not only does it go to your buy box, but trade goes past it into your stop. So you have to prepare. If you want to trade like that, you have to prepare a little bit differently. It's not as easy as just buying in and setting a stop and letting it go. But so hopefully that helps answer some questions. If you have any charts, we're going to try, like I said yesterday, we're going to try to keep these on the short side, not only for your time now, but for playback purposes for people that can't make it at this time. So we'll try to wrap this up in about 7 minutes or so. We'll try to keep it about an hour long. So throw, whatever charts you want to look at right now, chuck those over in chat. Take a look at them. We'll pop them on the screen. We'll see what's shaking. Outside of that, I always look at the bigger moves, the bigger players, just throughout the day. So, of course, I got Litecoin, USDT, Matic, USDT, BNB, USDT, and Link, USDT. These are all USDT pairs because I am primarily at the moment a USD trader. And that's another thing. So I don't always cover on-demand TA unless someone specifically asks for me. That's mostly RD and WK. But when you do, I will just pull up my USDT chart. So if you are asking for me specifically, tell me what you want. You know what I mean? Like whether it's a BTC pair or a USDT pair, because chances are if I find time during the day, I see my name over there and I go up and I pull up a chart, it's going to be a USDT chart 9 times out of 10. And then I'll put it up and I might not have time to wait, for the response to see if it was in fact the wrong one. So something to just put in the back of your head. And every analyst is different. I think a majority of them are BTC pair traders primarily. So those would be the charts that they would be put up. Of course, I'll chart anything. I just personally trade USDT at this moment in my life. That is what's a priority. Got it? Got it. Good. No questions? Everybody's good? You guys are all You guys are all just happy. All right. Well, that's cool. Somebody had a question the other day about fibs, so I guess we can cover that now. We can pull up a clean chart. Let's get out of dusk. Let's just go somewhere else. Anywhere. Knowles. Why not? So Knowles, USDT. Okay, so again, like always, the way I start charts, I kind of start on the weekly. I get a global idea of what it looks like. I'm just gonna scratch this. Maybe one day we'll do like a chart setup. Not a chart setup, but like how to tackle a chart from the very first time you open it. And not like how you need to do it, just show you kind of like the way I do it, the way Jacob does it, stuff like that. What are the main trend lines you like using personally? Swing fails I use all the time, and obvious large time frame trends. So for instance, Knowles weekly chart. If I were to throw a trend on here, right, we'd have to start. We don't really have a choice, so we'd have to start at the high. Bang. This is the first swing fail. Let me get out of here. That's the first swing fail. And of course, you can see there's like zero relevance to it. So it's like, who cares? You know what I mean? All of this is done. So nobody cares about that. This is a key level, right? Because that's your swing high before your low. We only know that based off historical data. This was the last time you had a high before you created your lowest low. But again, this is done, right? Price is finished. Unless price comes all the way down here, it's something to look at, but we don't need it on the chart today. So your next level, right? This is your next swing fail. Here's a high. Here's price reversing, attempting to come back up. You're always trying to break the next high, right? Always. Just like you're always trying to paint a lower low. It's just like, that's the way it works. So this would be a level that I would look at, right? First. So I know we got a reaction, came down, came back up. We broke it. We came back, closed above it. We pushed down, right? Unable to find support. And now this level, essentially, until we cross back over it, is resistance, right? This will remain a resistance line. Horizontals, I would come over here, grab my horizontal line, basically just let the magnet do its work, say bang. There we go. Horizontal support. So now within seconds, I could take a look at this chart and I could say, all right, we're in a clear downtrend. This is fairly obvious. So let me grab my little arrow tool here. Okay, clear downtrend, right? I don't think anybody's going to disagree with that. First area of support, yellow line. That's it, done. Now you could dive in on this on, let's say, a 24-hour chart and say, all right, did we get any reaction? You know, what did it actually look like? When we came down here, it wasn't a touch here. It was a touch here, barely a touch, barely a touch. So it was kind of a triple, quadruple bottom on the daily, right? Pretty important. Over here did look like you got a pretty good reaction buy side, but it failed to the upside, right? And starting to push down again. Now, when these things happen, and I've seen this happen over the last like 18 months, you know, everybody would tell me this is the bottom, this is the bottom, this is the bottom of whatever alt chart that they're looking at. And I say, all right, well, you know, did you look left? And they'll lie to me and tell me yes. But the truth of the matter is they didn't. So what I mean by that is, okay, yeah, we got 1, 2, 3 candles down, right? Strong candle on the third candle down, 1, 2, 3. This is similar to 3 black crows, but it's not. So one, you got a slight candle pattern action there, right? But then you have, you know, this little move to the downside, not a tweezer bottom, but pretty close to a tweezer bottom. Then you got a little push up. And this is enough for a lot of people for a reversal. So what I tell them is look left. How many times did you have that same situation or something similar? So if you didn't see the future, if you didn't see the present, is it still that bullish. And they'll look at me like I got 7 heads. And I'll say, all right, for example, right here. Price came down, pretty strong, hesitation, another strong candle, bang. You got a good reversal candle, don't you? Right? This is considered an inverted hammer. Same thing right here, inverted hammer. Same thing. Right now, price came back up. This is excellent. Kind of got like a bullish engulfing if this was bearish, but it's not. But within 2 days, you're like 3/4 up from what you lost. Right? You haven't quite got the 3 strike. 3 strike would be 3 candles overcoming that previous. That didn't happen because now you're a little bit bearish. And then bang, you got another topside candle. You're like, boof, boom. Yeah, I told you. This is it. This is, we're good. Downtrend's over. And then you had all of this. Okay. And we just continue to look left, right? What happened over here? Price high, right? Came up 1, 2, 3. Came down a little bit more. 1, 2, 3. Okay, came down a little bit more again. Okay, this looks pretty strong. This is a good 1, 2, 3 drop again on the bearish side. Good buyback, right? Size that up with the volume, not so bullish, right? That's pretty terrible. So that's one indication that not a whole lot of strength in this actual move. But you say, yeah, it's reversal anyway, because look, we held the bottom, tweezer bottom, almost like an abandoned baby up top, another like a triple bottom, and then like a quadruple bottom. So what you're saying, what you're convincing yourself of, and this is on a daily time frame. So this took 5 days for you to hypothesize that this move was the end of the downtrend. Like, this is it. We did it. Winner. Now we're X amount of days to the upside. Oh yeah, forget about it. This thing is right back to the moon. And then what happened? You got tweezer top, but psychology would have told you that no, I've already convinced myself I'm in an uptrend, so there's no way that tweezer top, even exists. I'm not even going to pay attention to that. And then what happens? You sell. Bang, sold. All right, so my point is, you don't expect this to be a reversal. Just like if you did over here, you would have been wrong. If you did over here, you would have been wrong. If you did over here, you would have been wrong. If you did over here, you would have been wrong. And if you did over here, you would have been wrong. Every single time you would have been wrong. Why? Because the prevailing trend, right, is down. That's why. So you want to just keep that in the back of your head and line yourself up with support first, right? Resistance second. So support is what we're looking at. So I wouldn't be looking at doing anything with this essentially until we hit these levels, or I was convinced otherwise, right? So what convinces me that we're in a reversal? A couple things. First off, key levels need to be hit. So this is a level of resistance. This is a level of resistance, right? So if I'm coming down and if I'm just talking structure, right, just straight up, bare bones trading, price action structure, this is all I'm talking about. Bang, 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 right? I'll draw that 1,000 times a day. Resistance, support, structure. This is trading. So that's what I'm looking for. You got a low, a high, higher low, higher high, higher low, right? That higher low, right, is either even with and found support to a previous structure high, right? And you're still well within trend. If, however, you lose this, you are still technically in a trend because you have a higher low. Okay? Low, high, higher low, higher high, higher low. The second this closes below this, your structure is invalid. Now you have a low, a high, a higher low, a higher high, and then a lower low. What does that mean? That's a swing fail to the low side. Like that. So we talk about, or at least I talk about, swing fails to the upside all the time, right? You've seen this move a million times, right? Price comes back up, fails to make a higher high. And then what do you got? Swing fail, just like that. So now in a swing fail, the most important thing is flipping that from resistance to support and then crossing your previous high. Okay. And while you're doing that, you're looking for support on previous structure. All right. So this could do anything it wants in between all the garbage, because that's just noise. You know, it could do this and blah, 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 and whatever. It could go backwards in time. It doesn't make any difference, right? It has to cross this line. It has to cross this line if you want to be bullish. You have to. You don't have a choice. Typically, you'd like to see it pull back and flip it proper. And by that, I do mean you had resistance, flipped it to support, you came back and retested it. And when you retested it, it acted as support, which gives you confidence that, yes, this is a level price likes and respects. Then as you come back up, your first level of resistance is going to be that previous structure high that you couldn't get over last time, which caused the swing fail in the first place. You understand what I'm, my scribble? Do you understand the scribble? So yeah, so if the question comes back to what trend lines do I like the most, I like high time frame, clear decision trends, trends that make sense. And this to me makes sense. This also happens to be a swing fail, and I'm a big fan of swing fails and breakout plays. So therefore, this trend for me is everything. Horizontal support resistance is huge, and that's this right here. This is your horizontal support resistance level to the downside. Now, every trader is different, right? You could butt this up like this and say, all right, this was a false breakout. This is the main key level of support. And you're not wrong. They're 100% right. Some people are very, very, very technical, wick to wick, sat for sat. Some are a little bit more loose. I'm sort of dependent on the chart and what I see. So I change, every chart is a little bit different. But I would consider this like a zone. So I wouldn't do a hard line like that yellow either. I would kind of do something like this. Something that sort of encapsulates the wicks, but focuses mostly on body closing. Because I'm on a daily chart. Daily closes are important in crypto. So in that regards, I would have laddered orders. Let's say I had 5 orders laddered in here. And I was like, all right, I'm going to buy, I'll buy, and maybe, like a Hail Mary down here. But then you have to be very careful about position size and how you calculate this average so that you know what your position size could be if you were going to have a stop, right, even lower than one of your Hail Mary orders. So like down here. So essentially, like if your Hail Mary got hit and it didn't get hit with a candle like this, it didn't just get a nice quick wick down there, that's a trade you want to get the hell out of, because you're already wrong, right? You've already blown through your entire area of support. So to make this trade safer, you would do this. You'd say, let me get rid of this. This is my stop. I'm going to move that up to under my zone. Not going to play the bottom zone, and I'm not going to play the second to bottom zone. I'm going to average out 2 entries, one to the top side and one to the low side, right? And essentially, this will give me a good average if both are hit, right, in that center line, pocket area where I should be in the first place, right? This just allows you to get into the trade if it doesn't fully realize those lower entries. And like I personally started doing that because I started watching low volume coins and how they trade, and everybody front runs everybody. So it's like an area that should have easily been hit never gets hit because the people trading it all front ran it, right? So now, you're sitting here being the good guy trying to play it properly, and you can't get into a trade. So you got to front run the front runners. And then if they don't show up, of course, that one day you do take the trade and they don't show up, right? And now you're like, oh, well, what the hell? I could have got my entry. So you kind of put a front run entry to the upside and a typical or lower entry, meaning like momentum just dragged it down a little bit further. So you got in there for a better buy. And then you just have to calculate your position size as if both got hit. Average that out. That becomes the location for your stop. And then you know what kind of risk you're in. You would have to adjust that if only your first one got hit. All right. Let's see. What are the main trend lines you like using personally? Indicators. Generally, I'm a swing trader or a scalper. Brian, I'm both. I typically scalp through the day. And that's if the opportunity arises. Also, I'll intra trade. So that's a little bit longer than scalps. That could be, 2, 4, 6, 8, 10, 12-hour plays, as opposed to 25, 30, 40, 50-minute trades. And then I do, mid and long-term swing trades. So I kind of do a little bit of everything. Awesome explanation. All right, cool. Thanks, man. Learned a lot today. Good. Indicators. So, dude, there's too many indicators. First off, that's I mean, look at this list, right? This is just on TradingView, and this is nothing, dude. This is nothing. This is what's built in. All right, just in my favorites list is a disaster. I've personally look. So this is public library, right? Even with just like really nothing on here, right? It has to load every 50 or so. I personally have tested upwards of 500 indicators. I'm a pretty dedicated dude when it comes to that type of thing. And in that experience, it wasn't just throw it on and see if it worked out for that trade. It was, multiple charts, multiple pairs, back testing on multiple time frames. Very, very time consuming. Yeah. So if you want to do that, you can. I think it's a good idea, not to that extent, but I think it's a good idea to do it to a few and do them separately. So for example, if you want to look at RSI, do it, right? But only do that in and of itself. Really try to understand it. RSI is a very interesting character. I'm not gonna say it's good or bad, but it's an indicator that you can use. Not on every pair, not on every time frame, and I find a way to use it. Right, I use mine differently than other people. I use a fast and a slow. So for me, this is two different RSIs. I have a 7 period and I have a 14 period. I also use a center line. Right. I actually had someone custom build this for me. Super cool dude. I'll have to get his name and shout him out. It's something like NJ South or something. But anyway, super cool dude. And we went through one of my RSI videos, and we were talking about it, and I'm like, dude, can you like make that happen? He's like, yeah. I was like, oh, well, that's, it's good. It's good to have friends. So again, I use mine a little differently. This is a center line right here, 50 center line, bang. It's always there, never moves. I never have to add it on to the chart. It's just always there. Sweet. I had them label these as aggressive and conservative. So conservative, a 70, 30 on a 14 period, right? That's a normal default setting RSI. Aggressive, 85. That's this guy up here, 85 and 15, meaning you got a lot more room before that's actually considered overbought or oversold, right? So you get less triggers to go into an entry trade based off of confluence on RSI. And then, you got your little background window over here, which is just whatever, that's suspect if you want it or not. And then you can play the RSIs differently. Not only can you say, all right, well, I want to take a entry trade when I see both RSIs are in their respective conditions, right? So in other words, my fast one is the white one, right? It's a little bit more jaggedy. It's 7-day period. So it's going to look like less smooth, super choppy, yada, yada, yada. It is considered in its happy home, right? To the long side right here. And this is when you're starting to look for shorts, right? So this is when you're starting to look for downside or exhaustion in trend, right? This should mean price was going up this whole time. Well, we can verify that in a minute. So that's basically March, the end of February to late March, right? We'll verify that in a second. This should have been an uptrend. So if price is going up that whole time, you're like, well, when the hell do I get out? This is a long trade. You're talking 4 or 5, like 5 weeks, 6 weeks. Like, when do I get out? This is my indication. It's the first indication. Now you can easily get yourself into RSI overbought conditions and stay there, for a week, 2 weeks, 3 weeks. And price can continue to go up and up and up and up and up. And you can max that RSI out, right? You could just like hit the ceiling and straight line across. But this would be the idea. Okay, we've entered on the fast, right? We entered on the slow on the 26th. But we didn't enter on the fast until the 30th. 4 days of lead time to decide is if this even makes any sense. So let's go back, right? Let's go back to where that was on our chart, right? So we said February over here. Where the hell is February at? February to late March. So, right, this is the area. Is that what we were crossed over. So it'd have to be up here. Okay. March. So this is that's our March 31st and all the way down here. So this is when the trend started. So you can see, follow the cursor on the left. Follow this guy. All right. So our trend started down here, February 23rd. Bang. Right there. That's good. That's good. That's good. That's a low. That's a good spot. February 23rd. Boom. Right, follow it up, yada, 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 yada. We're still in the trade, rah, right here. March 26th, we started to get the first indication from the 14 period. So let me zoom this in a little bit, blah, blah, blah. Okay, so right here, March 26th. Follow along, everyone. Okay, we got our first indication from our slower RSI, our 14 period, that, hey, keep your eyes open. All right. Now this is looking great. This is awesome. You got a low, you got a high, higher low, higher high. What the hell is this RSI talking about? This is all bullshit. This is a fantastic trend. Sure. For now. Keep watching. 26, 27, 28, 29. What happens on the 29th? Right? We just about to enter, we haven't crossed over yet, but we're just about to enter our fast RSI into its keep your eyes open area. Okay. Eyes are open. Bang. Now we're in. All right. So now what you're looking for is this. You're looking for the first indication that you are no longer going up, right? Right. So you're looking for essentially rejection at any level above on the faster RSI, right? Or even the slower RSI. But what you can do is this. Okay. Just like any other indicator, you could paint all over them. You want to make a falling wedge. You want to throw some horizontal support resistance on here. You want to do some harmonic patterns. I don't care what you do, right? You can use any one of these and draw all over them. So I do horizontal support resistance like this. I do RSI swing fails. I'll do divergences. So this to me says, all right, when we approach this level of resistance, if we get a cross above and a reaction push, I'm staying in. If we get any indication that says, otherwise, any sort of hesitation that says this is going to be resistance and you're looking at a double top, I'm out. So what happens? Follow along. Here we go again. March 26, bang, first indication, right? 27, 28, 29, 30, right here. We just finally crossed. Now both eyes are open. All right, we push up, we push up, we push up. Everything is good so far. Bang. Next time we get indication right here that we're coming down, that's your first candle to the downside. You could do one of two things, either exit the trade, right? Or let it play out as a swing fail. Come down, find support on first level. If it doesn't find support on your slower RSI, then you get out of the trade. Basically, you lose it right here, dips back into the 70. If it finds support at the 70 and push back up and can't go any higher, then you get out there. So you would have gotten out here or here, right? Or bang, here. Right, so you got three areas. Now, that's one piece of the puzzle. I'm going to mark that area so we can look at it in detail, larger setup. Here we go. Now, ask me, would I have gotten out of that trade anyway? Hell yeah. Why? Because I took the time to go on the weekly chart, swing it back to a daily, and get my key levels of horizontal support resistance and major trend. And that right there, that line, I'm already out of that trade. That trade started down here, right? We looked at the RSI. We said February 23rd. This was the buy-in area. So bang right there on that level. And then let me get my little tool over here so everybody's all happy scrappies. Yeah, whatever, something like that. Right, so we used our tools like this, right, to enter that trade. And that was good. We're in the trade. Everybody's, super happy about that. And then we decide, all right, well, while we're in there, we're going to follow it and look for it for an exit, unless we have, some outside circumstances that tell us when to exit. This one, for this example, we already knew. That's your level. That's where you want to get the hell out. All right, horizontal support resistance, mega bowl shape. So essentially, you just got yourself a huge cup with handle, right? That failed and broke to the downside instead of going to the upside. But that's a whole nother story. So you have an indication here. Not only that, look at the confluence right here. High. Oh, no, I'm sorry. You wouldn't have had that line just yet. Sorry. You painted that line after that move. But you certainly had this horizontal, and that would have been your indication to get out. That would have been overside or overhead resistance. That's a ceiling for the trade. And then that's your indication to get out, reevaluate after a pullback. And here's your pullback. And you have to decide, is this a trade that I want to pursue for any extent, right? If for any reason, do you see anything? So just like, everything ties into each other. We were talking about probabilities before. The probability of this being the exit level of the trade is high based off the confluence you had on horizontal support resistance. RSI was telling you fast and slow. exhaustion in trend. It's time to look to get out. Now, so you throw your fibs up, bang, you over here, 618 pullback, almost made it down to the 706, not quite, but 618's pretty good. And you didn't exactly hit. I would have liked to seen something like this. When it comes to these big pullbacks, I'd like to see these levels get respected. So it would have been something like that, and then it would have been something like this, right? So these are levels that price interacted with on the way down. So there's significance to them, right? Just like this level right here, if it were to do anything on the way up, this is what you look for. You look for a reaction zone and see how it plays out. So in this example, right, for reactions, if you were to play that very first one, you'd say, okay, on the way down, you expect a reaction, and you did. Again, this is a daily chart, so it takes a lot for this to realize, but price did come down, broke through, closed above, found support right here. We know that this is our level. That's our 5 because we have our high, we have our low. So we're able to drop a fib on there, and we know the channels that we're sitting in. So we say, okay, well, at the moment, right, we did find support there. So that's cool. We know that this level means something. It's meaningful for a reason. Now, we did lose it, right? It ended up being support 1, 2, broke above it, 3, 4, and then we lost it. So once you lose it with price action, you look for a retest, which is what we got. So break to the downside, 2 candles up on the retest, and push back down for further downside. This is exactly what we talked about earlier with a support resistance flip. So price flipped it, right? It was one support, and now it's resistance. Price came back down, and where did it go to? It went to the same level that we already targeted earlier as an area for interest. Right? This is an interesting level. And that being said, it's not a fib level, right? It's kind of, again, you're at this point now, you've broken through the 618. You haven't reached the 706, which is not a fib level, but it's used in crypto. And then your next target would be the 786. So you're kind of just hanging out in dead space over here, unless you have a reason for horizontal support resistance, and you do. This level right here. Now you also have this zone of accumulation. So what you can do is take your magnet off and kind of like chunk it out, right? Look for body close, majority trading, something like that, where everything above is kind of wicks and everything below is kind of wicks for an average period of X amount of days. Swing that over something like this, and you say, all right, well, that's my zone. And that zone is confluence with this area over here that as price came down, price reversed and found resistance for whatever reason and pushed back down. So that's just, that's how I would look at, any chart, just whether it was price action or trend lines or flips or fibs or anything like that. That's how I would put weight into those trades. Good stuff. Awesome explanation. Thanks, man. Learned a lot today. Good. Cool. Is that RSI indicator you have?
Did you see ZRX, man? Ugh.
What, is it going?
Oh, yeah, man.
Volume's up 7%.
Rocket ship, baby. Up 7% since I said.
Oh, hell yeah. Nice. Very nice.
Yeah, see those W structures, guys? Those W structures are beautiful reversal plays. Let me see where our target would be. Yeah. Let's see.
Yeah, that's great. Are you pulling the target off the swing high to that low for a 2-3?
Yeah, look,
Are you going?
Yeah, this is. What a downtrend, man! Holy shit, that just.
Yeah, that's pretty
got
aggressive.
Absolutely wrecked. It's been abandoned by the market maker gods.
You think? It looks like what's that dinosaur with all the spikes on the back?
Stegosaurus.
Yeah, it looks like.
First target would just be the lower end of support, where it would probably get rejected again.
Okay.
It's kind of like an ICX play for me personally. That's the way I was looking at it. Very high risk, low percentage of strike rate, but sometimes can be worth the risk just because you can set your stop at 10% and your target at 30 to 40%.
Right.
Not trades I typically like to send as signals personally. For signals, I am more looking for continuation setups, just high probability continuation setups. I used to send reversals, but the problem was that most people didn't take every signal, right? So like if you have, let's say, a 30% strike rate, but you're on average getting like a 6-to-1 RR, well, if you don't take the 2 or 3 that explode for 60-70% moves, and you take like 4 or 5, 8 to 9% stop losses,
You're just down, yeah.
you're just down. So, and I've kind of converted to just mostly continuation or trend trade setups. But same, this looks very, very similar to ICX, and I was expecting basically a move up to this 2150, 2200 level. I can show you ICX real quick as well, but same concept. You can see I broke that downtrend, retested it here, and then I'd basically, my target would basically just be to, get back to that previous resistance level to reject and probably drop.
Yeah, for sure. No, that looks good. That looks good.
Cost had a nice little move just now as well.
Cost is up 3%. Volume's up to 4.8 million. Fuck that chart.
Garbage.
Like, I mean, for real. Oh boy. Yep.
This
Yeah,
is
that's gone off structure, man. That's working its way there.
a little bit of a bull flag. Yeah, we got rejected on the 618 twice. Pulled back to the 5 fib. Never got like more of a pullback. But yeah, this thing's still heading up. Anchor got a little bit of volume as well.
Yeah, they went up 3%.
It's up to
just
49. So anybody that bought in that 47 range I gave yesterday, it's up like 4%, 4.8%. So that's good.
now. Nice.
Bitcoin is still in this macro wedge structure, kind of holding on to this lower zone. We did get the 10,250 tag on that 50 MA. So it's up $50, but it's still in this rising wedge structure. So, a little caution, but it's still looking pretty damn good. I did see an interesting analysis I'll pull up on Twitter, comparing 2014, 2015 from Trade Soros. He doesn't have a lot of followers, but he's a pretty good fundamental guy. Trader Soros. Yeah, there we go. Let's bring this up. Bring this down here. Whoops, where'd it go? That was not it. Where did it go? Right here. This was essentially the November to June. This was like 2014, 2015. You can see the price was like $400 to $500 in Bitcoin. We had this massive peak, massive sell-off, kind of filled out this symmetrical triangle, kind of rode that lower end of the zone until eventually it kind of broke out. So he was just saying, it could do something like that, riding this 50 EMA, kind of up, and then eventually just kind of pushing out. So something to watch for.
Look at those wicks down. That's wild.
Slow liquidity.
That's brutal when price is at 440 and it dumps to 380 in a flash.
It dumped to 293.
Is that a
483 to 293.
Oh, on the left side. I'm looking at the wicks after the apex.
Those
but yeah, I
wicks,
mean that one's brutal. Are you kidding me? That one's a disaster.
Yeah, pretty ridiculous.
But yeah, that zone right there, you're talking 1, 2, 3, like 6 of them every other day. You had a wick down. those are great opportunities. Quick rips. Oh yeah, 380 to 4 and change. I mean, you got to figure those are probably 25% moves. Not bad.
Yeah, cost just ripped above that. This thing's just gonna keep heading higher. It looks like we did get a sell-off on Dusk finally.
Easy what you say. What we did was we just tagged our buy. That was perfect.
Your buy zone?
Yeah, that was I think that was an on-demand TA. Somebody was asking for something. I don't know. So.
Oh yeah, I'm just saying we dumped from the high there.
Yeah, so it ended up being we got a little bit of buyback right now. I'm sort of watching that as it goes. So just that little wick right there is good enough for me. But that was what I was looking at for at least a play, right? So came back down 382 confluence with structure on the way down. So this level right here, I think was the 12-hour chart. You can see the most clear. So if you push down right here, the double body top close, right? That's the level. Level sitting at 2059. Again, this is USDT chart. This is not a BTC chart. Pushed up low to high, 382 pullback, well within the respect of our current trend. So that's a healthy pullback. 1618 target zone from the first initial big pullback was this level right here. That was first entry if you wanted to average down into it. Push to 38 push up 26 sitting at 2965. So that's just about top of bowl, at least on these charts. I don't like using the very first candle, but it's here. So I'm not really going to pay attention to it. I'm sort of capping this as the ceiling. And then from there, I'll talk about price discovery for 36423s into the 41-cent zone. But for
This thing
now,
got
it's
listed
doing
at
its thing.
6,300 sats. Holy shit.
Yeah, and I did pull up the BTC chart, and it's very similar. I mean, price action is, I don't want to say it's identical, but it's at least very similar. It's one of those coins that has been not caring what Bitcoin does, and it just maintains its thing. You know what I mean? So it's rare that we see that now with confluence in a BTC pair and a USDT pair. One is usually dumping and mostly USDT dumping while BTC pumping and vice versa. But yeah, look, I mean,
Let's see.
looks good.
One did not get a break out of our triangle that we were hoping for. Broke down. I think I mentioned I took like a 3% loss on that trade. I was hoping for a nice spike to retest all-time highs. It's currently sitting on the 618 from the total move there. It doesn't look great though. Kind of looks like shit actually. ERD has been one I've been kind of eyeing. Did break this structure, retested it. It's kind of meandering right now on the 1272. I was hoping for a potential breakdown to the 5 to 7 zone. But yeah, kind of meandering. If we can get some volume in here, that'd be pretty nice. Okay, so another chart that is definitely worth watching is BTT USDT.
Ooh.
We have actually 100% retraced from our all-time low. Well, actually, sorry, from a key support level before it broke up before. And this did a solid 180%, 200% off this level. So if you're looking at a high-risk play, averaging into some BTT for potential 100% play is not too bad looking. This was a previous resistance on the USDT pair listing, but this is a zone that it does like to move out of. So a high risk play there. Let me take a look at some of the other stuff, see if there's anything obvious going on. This doesn't work too well in these low cap coins. That's not showing much of a divergence. Let's look at the daily. OBV is not too bad. MACD's actually kind of turned to the upside. It had a cross down here. Let's look at the stochastic. Stochastic still kind of meandering to the downside. No crosses yet. RSI is still very firmly in bearish control, but definitely one to watch. So keep your eyes out for this one, because once this thing goes, I think this thing will rip. So BTT, definitely one to keep an eye on. Now, if it does break this level, then we can just, it's a very, very simple and easy invalidation level. I mean, even if you buy here, you could just set a stop at like 6%, just because it's such a obvious level there. BTC is in a very similar structure. Listing price here, 6 sats. I think that 5 to 6 sats, I think this is a decent long-term play. Justin does like to pump his stuff, but he is getting in trouble with the authorities, so maybe we can hold off on that for now. But then, what was the other one? Oh, BNB. I wanted to cover real quick. So BNB was one that I did throw out. It's currently holding basically like 27,000 sats level. It did break that, but it's still holding this top trend here. So this looks good. If it breaks below here, maybe we cut it, but it does look like it's got a 2050 cross coming up. MACD is showing some strength. Stochastic is pointing to the upside on the daily. So everything's looking pretty good as far as BNB is concerned. And they did just announce, I don't know if you guys caught this, but they did just announce that they, let me see, that there was a U.S., that they were basically going to go, let me see, where did CZ say this? But CZ basically said something along the lines of they believe that they'll be fully operational in the U.S. within 2 months. So we may not have to wait super long for the to go to Binance US or that platform. So something to also be aware of. And then, do you guys want us to cover anything else before we wrap this up? Kind of covered the hot spots there. And remember, guys, these are designed for you guys to, take actionable items on. Just because it's not a signal doesn't mean you can't trade it. The whole point here is to learn, kind of familiarize yourself with some of the stuff. And I did open up that community chat. So if you guys start seeing something, if you see a trend line or if you're seeing a breakout, throw it in the community section and, we can start learning from that. So, so I appreciate you guys watching. Another awesome stream, almost 2 hours, at least 90 minutes. And again, these guys are, these webinars are for you guys. So make sure you're asking your questions. If you want to learn about, anything specific, asking about setups, RSI, swing trades, scalp trades, just ask them during these webinars so you guys can learn from them. But anything else you want to add, man?
No, I'm glad you brought up BTT. That's been off my radar so long that I needed someone to tell me to look at it again. It's just been falling for
I know,
months.
man. Yeah. And then I did throw out, I don't know if you guys saw it, but I did throw out CRPT in the high risk trade, Crypterium. And the reason why was Crypterium was actually a Palm Beach Confidential pick about 4 days ago. As far as he just kind of mentioned it, but he did say it was going to be in the actual newsletter, and that newsletter goes out to about 2 million people. And so usually the coins that go out, there's algorithms programmed to actually auto buy whatever coin gets put out. And so if you had bought when I had mentioned it, it was around right around here, and it's up about 37% on the day. So let me look at CoinMarketCap real quick. So high risk, but this one paid off. Sometimes having that intuition, up 23% on the day, up 24% on Bitcoin. But this thing looks like it's gonna continue to rip a little bit harder, especially because it's a low cap. It's 32 million, and it's on KuCoin. So hopefully you guys got that play. If not, there's plenty more of those high risk plays. They are high risk though. Because they are low market cap, so they can pump, they can dump very easily. So just be cautious of that. Any idea where CRPT is headed to? Well, it's got some resistance at $1.60, and it's currently sitting at. Wait, hold on, let me see. Yeah, its last peak was at $1.60 back in 2018, and it's currently sitting at. Let's see, where is it at? 38 cents. So Bitcoin value, it's sitting at 3,000 sats, and back here it was at 7,800. So I mean, this thing could at least do 2x, which is a 100% move. Oh, I'm sorry. I'm just looking at this this chart here. It's not like super great. The HIT BTC one's not great. So what I'm looking at here is it had this peak of around 51 million market cap. Bitcoin was at 8,000, 7,800, with a price of around $1.50. So that's kind of where I'd be looking at as far as that. Market cap is currently at 32 million. BTC value is around 3,700. So yeah, I'd be looking at least 100% move. If you got in down here, that's where I'd be targeting. Yeah, I still think it's got probably like 60-70% left in it. So I'm just kind of letting it ride. I'll just trail my stops up once we get a little bit of a consolidation. But if it dumps, I'll just, move my stop to break even. All right, guys, appreciate it. And we will see you tomorrow on the webinar. Make sure you tag me in chat, and we'll go from there.